The big corporate story in South Africa, anyway, over the last few weeks has been surrounding Adcock Ingram. I think it was February or March that Bidvest first started to make a play for the company, and since then the company has been in play. It was inevitable, of course, that if Brian Joffe was having a look at it, then it must show some sort of value because of his reputation, and other people would come in, and indeed that's what's happened. We spoke a couple of weeks ago on Power Lunch to the CEO of CFR, a Chilean company that is interested, and it seemed as though everything was very, very cosy, but not so cosy, because have a listen to this. It says here that Oasis Group Holdings today announced that the non-binding offer proposed by CFR Pharmaceuticals of Chile to acquire 100% of Adcock Ingram, the manufacturer of some of South Africa's most well-known brands, etc., is not in the best interest of its clients and other minority shareholders. The CEO of Oasis is in the studio with me now, and that's Adcock Ingram. Adam, you obviously don't like it. Before we get into that, how much do you own of Adcock?
We own just under 3% of Adcock's.
So you're a significant minority shareholder,
Yes.
I would suppose. And what's the history of that shareholding?
We bought it obviously over the last couple of years. Adcock's have underperformed quite materially. They've underperformed operationally, and secondly, they've also been investing very significantly in manufacturing. So the share price and earnings have been under pressure for a number of years, and in that period we accumulated our shares, like we always do, buying shares when they're cheap and when they're underperforming. But remember, they have some of the best brands. From a demographic point of view, pharmaceuticals in this country and continent will have very, very strong long-term growth, and we have a highly regulated industry. And then, we just think that the manufacturing, as they ramp up manufacturing, the profitability is at the low end of its long-term history, and normalized earnings is a lot higher where they currently are.
So you think at the moment that it's going through a quiet period, it's rebuilding, it's obviously been in the shadow of companies like Aspen, but it's doing the right things, and you think that Jonathan Lowe and his team can take the company forward?
So we support current management, but if they're not able to, remember Nampak, there was a change of management and you had a significant run up in the share price and performance. So we think we support the current management, but if they're not able to deliver, then we actually have to look elsewhere. So the real story is we need to give them some breathing space to continue their program. And if, with Panado and so many other brands, they should be doing a lot better.
Okay, what don't you like about the CFR bid? Is it too low? Is it the fact that it's not the way you want the company to go? You didn't like their prospect statement? You didn't like their strategy? What do you object to?
Basically, firstly, you're buying CFR, which is a company with much lower levels of profitability based on EBITDA margins, half Adcock's return on equity. And remember, Adcock's return on equity currently at 20 is much lower than its historical norm of about 28%. And you're buying CFR at 10. CFR sitting on 3 times the amount of debt that Adcock has, so it's much riskier business. Thirdly, it operates in some minefield countries like Argentina. Nobody from South Africa has made money in Argentina. And importantly, South America, the regulatory framework was where we were 10 years ago. So South Africa is very regulated.
Yeah, okay. Alex got a question for you. He's itching to get into this story because it's a really good one. Alex, go for it.
As always, Lindsay, what do you think it's worth then? If what price would you be happy with from CFR for Adcock for your shares?
I think the important thing is we don't like the CFR share at this point in time. So when you're getting CFR shares, you're giving up an undervalued situation for a highly overvalued, risky situation. So if they put a full cash offer at around 5-10% above the current price, that would be a fair price, taking everything into account. But to take CFR shares in whatever form, if it's 50%, then you're actually selling Adcock's closer to 63 Rand if you normalize the earnings and you normalize the share price. And at 63 Rand, it's significantly undervalued.
We believe, you say, that if this transaction goes through, Adam, that Adcock Ingram shareholders would be giving up their shares at a low point in Adcock's earnings cycle. Furthermore, as currently proposed, a portion of the offer price will be settled through the issue of CFR pharmaceutical shares to existing Adcock shareholders. You've covered that. A lot of people might take exactly the other stance and say it's been an underachiever in a market that has had the potential to do so well. So why should it overachieve in the future? You've already mentioned that you support the current management. If things don't start to turn around and the sort of squabbling over the ownership of Adcock goes on, will you be proposing perhaps that management is replaced?
If they don't perform like any other team, if I don't perform, I'll be replaced. So if any other team doesn't perform, they should be replaced. But we need to give them a breathing space to perform, and we should set tougher criteria. The remuneration committee should be a lot tougher. And therefore, we believe they need another year to start delivering. And at the end of that period, we should look back and see, are they the right team to be leading this company? And if they're not, we need to find a better management team.
Have you been engaging with them,
So
Adam?
Importantly, Lindsay, the one thing that we've missed, the rand is 15%. It's a low point relative to the peso. Now, everybody's very pessimistic with the rand at 10 rand odd to the dollar. But it's very, very cheap and undervalued relative to where it was when it was 650. And so you must probably have a 15% headwind of the peso rand. So it's a low point. So if the things normalize, you will lose 15% just on the currency by taking the CFR
That's the
share.
first time I've heard that. Alec, you've got a point here.
Yeah, that's a compelling argument because the rand on the MAC index is also extremely low. But you've spoken a lot about management. Have you chatted to Kotso Mokele, the chairman, or to Jonathan Lowe, the CEO, about your concerns?
We have spoken to the company over time, and we communicate that through our votes at board meetings, and we AGMs, and we communicate our votes through to the chairperson. So the real task is we need to give them some breathing space, and once they, and I think it's another 2 years where we need to give them that breathing space and then really hold them accountable.
Here's an interesting question for you. If Bidvest comes in at the same price, would you go for the Bidvest offer? Or is it because you don't think that the Chileans are sufficiently cognizant of what goes on in Africa? Is that one of the reasons you don't like them?
I think, this company has been around since 1922. Between 1922 and 2009, there wasn't much growth. In 2009, it was a tiny company with EBITDA of $61 million. Since 2009, they've been on an acquisitive phase, growing by acquisitions all over the world. It's a very short period of time to settle those acquisitions. Now they're coming into a new country. Adcock's will be 41% of the combined business and Africa. So I think you're actually working in dangerous territory of a highly acquisitive, highly risky company, and you're taking those shares with a headwind of a currency, a headwind of valuation. I think it's better if they want to buy the shares, let's take the cash and we can utilize it in a much better way.
Good point.
Adam, you've stood up against a number of takeovers over the years. What's your record been like?
I think importantly, we look at the value for our shareholders, and if we believe that they've been fantastic value, then we will stand up. Now, let's go back a long, long time ago to Energy Africa, where we voted against the takeover. We couldn't stop the takeover, but we made sure that shareholders had the offer of Tullow share oil. And the share price moved up from about 85p to over £10 today. We stood up against, we thought the AVI takeout by Tigers, undervalued AVI. We liked the management team, we liked the story, and we thought that was undervalued. And the same with Nampak. So the track record must probably have an 85-90% track record where we've stood up against companies, and it's been better to hold the company rather than sell it at the low point in the earnings cycle, low point in the valuation cycle. And remember, we value investors. We actually buy companies in low points in earnings cycles, low points in valuation cycles, and that's how we make our money and significantly add value for our clients long term.
Adam, why don't other asset managers have a similar stance? And that's really what I was getting at. Energy Africa was it was a steal when they took it off the market, as we well know today. often Oasis has been almost on its own challenging some of these takeover opportunities. Why do you think the rest of the industry doesn't follow you?
I think I'll talk about Oasis, and I'll leave everybody else to conclude.
What's
on
it
the rest
about
of
your
the industry.
culture? What's it about your culture that makes you willing to go into the ring on these things?
I think importantly, we paid to look after our clients' money, to look after our clients' wealth, to grow our clients' wealth, and we've got one ambition and one ambition only, to look after our clients' wealth. And by looking after our clients' wealth, it means that we actually have to defend situations where companies are bought very cheaply. We have a longer term view, and our longer term views of value creation, of wealth creation, and that's our only objective. So if it means that we have to get our hands dirty, we have to get our hands dirty. And that's really our job.
So what you've done is you've more or less paid your school fees. You've gone with this company. You've seen what its long-term strategy is. It's done nothing compared to the rest of the market and certain of its peers for a couple of years. You've been accumulating stock, and you suddenly think to yourself, all this work down the drain because we don't like this CFR bid. Is that your attitude, simplistically?
No, I think the real attitude is somebody's trying to buy something from you and force you to sell it at a price significantly lower than intrinsic value, therefore destroying the upside and destroying the wealth of your clients. And the real objective is that with great conviction, we believe that this company over the next 5 to 10, 20 years will, on its own, with the right management team, will deliver excellent value creation. And we believe very strongly in that, and we will protect and try and defend that situation on behalf of our clients. So yes, we basically, what you have is a pent-up value that is in the company, in the share price. And why should somebody else, why should the CFR shareholders, minority shareholders, benefit from that? Why shouldn't the Adcock shareholders benefit from that?
Quite right. Alec asked if you'd spoken to the chairman or to the CEO of Adcock. Have you spoken to other minority shareholders, almost as though to get a group together, an activist group?
I think one must be very careful in doing that, because you could be a concert party in doing these things. I think by coming in, putting out a press statement, we actually going public and telling people what our views are, and if they support it, they'll come and support us, and we'll be successful in either improving the bid or defeating the bid. As long as we return value for our clients, that's the most important thing. So one must be very careful. Some of the people are competitors, and you don't know how people take it. So we actually have to use the press releases, etc., as a method of communicating our view.
Adam, just so that we can follow this saga accurately, how much do you need to block the deal? How many other shareholders, to follow up on what Lindsay was saying, will you have to get into your camp?
I think you'll need about you'll need another 7-8%, and then you'll be able to block the deal. And I think we need to work towards it. If I'm actually following the media, I think the PIC has indicated that they're not keen on a deal going this way. And I think if with the PIC and Oasis together, we should be able to block this deal materially.
Final question. What do you think is actually going to happen here? Do you think that you're going to prevail, or do you think that the muscle of an overseas raider is going to prevail?
They're actually a very small company. They're not a big company. They're opportunistic, and so we must compliment them for being opportunistic. And we need to do our job. We kind of have a smallish stake, 2.5–3%, and we just need to do our job properly. And if they create, what the important thing is, we need to protect, to the best of our ability, the wealth of our clients. That's all. And if we do that and we achieve, then we've added value for our clients, and that's really what I get paid to do.